Did you know that if you had invested $10,000 in the S&P 500 index in 1970 and held on to it, you would have more than $3 million today? We believe that dividends have the power to do more than just pay the bills. Warren Buffett, one of the richest men in the world, is known for his love of dividend-paying stocks. And even the great Albert Einstein once said, "Compound interest is the eighth wonder of the world." So if it's good enough for these legends, it's definitely worth exploring. We'll unveil the secrets of dividend investing, showing you how these tiny payouts can become a catalyst for extraordinary wealth. John dreams of a comfortable life, but is unsure of how to make it a reality, especially when it comes to dividends. Living on dividends is not just a dream, it's a real possibility that can give you the financial independence you've always desired. Imagine a life where you receive a steady stream of income without relying on a fixed pension or worrying about running out of money. Sounds incredible, doesn't it? In this exciting video, we're going to reveal 3 ways on how to live on dividends and achieve financial freedom. We'll provide you with actionable strategies, real-life examples, and expert tips that will empower you to take control of your financial future. But that's not all. We have an exclusive surprise for our viewers at the end of this video that you don't want to miss. So grab a pen and paper, get ready to take notes, and let's dive into the world of dividends. So how exactly do you live on dividends? Before diving into our first way, here are 3 important tips for evaluating which approach may be the best fit. Defining your life goals, assessing your risk tolerance, and seeking guidance from a financial advisor. These are the ultimate tips on choosing the best dividend investing strategy for you. Now, let's start with the first way, building a dividend portfolio. This strategy involves carefully selecting and investing in dividend-paying stocks. It's like building your own personalized money-making machine. There are different types of dividends that you can choose to invest in, and while deciding which ones are the best for you, always remember that there are levels to it. We know that sometimes it may be overwhelming to find a stock to invest in, so we've categorized dividends into 3 types. There are reliable dividend portfolios, growth dividend portfolios, and high-yield dividend portfolios. Let's start exploring with reliable dividend portfolios. Companies like Johnson & Johnson, Coca-Cola, and Procter & Gamble have a proven track record of consistently paying dividends. These companies have established a reputation for consistently paying dividends, even during challenging economic times. However, it's essential to conduct thorough research and consider your own investment goals and risk tolerance before making any investment decisions. By investing in a diversified portfolio of such reliable dividend stocks, you can enjoy a steady income stream year after year. Let's say you have $100,000 invested, and the average dividend yield of your portfolio is 3%. That means you would receive $3,000 in dividends annually, providing you with a reliable income source. Another type of dividends people love to invest in are growth dividend portfolios. With a history of consistently increasing their dividends over time, companies like Apple, Microsoft, and Visa have not only paid dividends consistently, but have also raised their dividends year after year. By investing in such companies, you can benefit from both increasing dividend income and potential capital appreciation. Imagine you have a portfolio of $200,000 invested in dividend-paying stocks. Initially, you would receive $4,000 in dividend income each year based on a 2% yield. However, as the dividends grow by an average of 5% annually, your income could potentially double or even triple in the future. Plus, your $200,000 investment has the potential to grow with the company and could potentially become worth millions over time. Now, for those seeking a higher income potential, a high-yield dividend portfolio might be exciting. This portfolio may include real estate investment trusts or REITs, energy companies, or utility stocks known for their relatively higher dividend yields. One example of a successful individual who has invested in high-yield dividends and achieved substantial wealth is Charles Schwab. As the founder of the eponymous brokerage firm Charles Schwab Corporation, Schwab focused on providing investment opportunities that generated income through dividends. Schwab recognized the potential of dividend investing and built his personal wealth by investing in high-yield dividend stocks. His strategy involved selecting companies with strong financials and a history of consistent dividend payments. By using this strategy, Schwab has built himself an estimated net worth of $8.4 billion. Imagine that John is investing in a real estate investment trust known for its high dividend payouts. Let's say he aims to generate a consistent monthly income of $3,000 from this investment. Assuming the trust has a dividend yield of 5%, John would need to invest approximately $720,000 to achieve his desired monthly income. By reinvesting the dividends, his investment can grow over time, potentially becoming a reliable asset that works for him. Now let's explore the second way: investing in dividend funds. Dividend funds are investment options where many people contribute their money to buy a collection of stocks that pay dividends. These funds then distribute a portion of the dividends earned to the investors, giving them regular income. This option offers diversification and professional management. By investing in mutual funds or exchange-traded funds, ETFs, that focus on dividend-paying stocks, you can tap into a broader range of companies. The benefits of dividend funds are exciting. You get the opportunity to benefit from dividend income while minimizing risk. Supercharge your investments with popular funds like Vanguard Dividend Appreciation ETF and iShares Select Dividend ETF. These funds bring together top dividend-paying companies, offering you a diversified portfolio with a history of consistent and growing payouts. Join thousands of investors and let your money work tirelessly to turn your dreams into reality. Let's consider an example of the Vanguard S&P 500 ETF, VOO, which is known for its broad exposure to the U.S. stock market. Suppose you invested $10,000 in VOO 10 years ago. Please note that past performance is not indicative of future results, but this example can help illustrate the potential growth. According to historical data, the average annual return of the S&P 500 index, which the VOO ETF tracks, has been around 10% over the long term. Assuming a 10% annual return, your $10,000 investment would have grown to approximately $25,937 after 10 years. Not only would you have benefited from the stock's price appreciation, but the regular dividend payments would have added up significantly over time. Last but not least, let's talk about the third and possibly the most exciting way: annuities. Annuities are financial products that you can buy to receive a regular income in the future. It's like setting up a special account that pays you money on a scheduled basis, providing you with a reliable source of income over the years. Picture this: you've worked hard and diligently saved money, and now it's time to enjoy the fruits of your labor. Annuities step onto the stage, offering you the opportunity to transform your hard-earned savings into a consistent and predictable income stream. With annuities, you can bid farewell to the uncertainties of market fluctuations and economic ups and downs. Say goodbye to sleepless nights worrying about market volatility. Annuities come in all different shapes and sizes to suit your unique needs. Whether you prefer a fixed annuity where your income remains stable and unchanging, or a variable annuity which allows you to participate in the potential growth of the market, annuities offer flexibility to align with your financial goals and aspirations. But wait, there's more. Annuities provide tax advantages too. By investing in an annuity, you have the opportunity to delay paying taxes on your earnings until you start receiving payments. This can be incredibly beneficial for your overall financial strategy. By postponing taxes until you start receiving payments, you have the opportunity to maximize your savings. The money that would have gone toward taxes remains invested, allowing it to continue growing. This tax-efficient approach can lead to a more efficient accumulation of wealth and potentially provide you with a greater income stream. Now, you might be wondering about the safety and security of annuities. Rest assured, annuities are backed by reputable insurance companies, giving you an extra layer of confidence. These companies have a strong financial foundation and a track record of honoring their commitments. Your financial future is in reliable hands. Imagine the stock market experiences a sudden crash, causing panic and financial turmoil. However, John remains unaffected and calm because he wisely invested a portion of his savings in annuities. While others suffer from the market downturn, John's annuity continues to provide a stable and guaranteed income stream, shielding him from the volatility and ensuring his financial security remains intact. It's like having an umbrella protecting him from the storm while others scramble for cover. A real-life example of a wealthy individual who has shown a strong affinity for annuities is Ray Dalio, a billionaire investor, philanthropist, and founder of Bridgewater Associates, one of the world's largest hedge funds. Ray Dalio has spoken highly of annuities as a valuable component of a well-rounded investment strategy. He has emphasized the importance of incorporating annuities into retirement planning to ensure a secure and stable income stream during one's golden years. Dalio recognizes the peace of mind that annuities can provide by offering a predictable and guaranteed source of income, allowing individuals to enjoy their investments without worrying about market fluctuations. As a prominent figure in the investment world, Ray Dalio's endorsement of annuities reflects the trust and confidence he places in their ability to provide financial security and long-term stability. Let's consider a scenario where you want to generate $3,000 per month from an annuity. The amount you would need to invest in the annuity depends on several factors, such as the annuity's interest rate, payout structure, and duration. Assuming a fixed interest rate of 5% annually, you would need $720,000 invested in order to get $3,000 per month. Choosing the right approach is crucial. It's not one size fits all. Consider your goals and financial situation. Living on dividends offers financial independence, stability, and a worry-free life. Don't just dream. Take action today to secure your future. And finally, John wants to invest his $10,000 savings in dividends, but doesn't know how much he can expect. Click on this video to see what he can expect.